As of yesterday, the S&P 500 has officially closed into correction territory. From its high of January 3rd to now, it is down more than 10%, and it continues to fall today. The Nasdaq is also in correction territory, deep into correction territory, and the Dow is getting there as well. So we're going to talk about everything that's going on in the market causing all of this turmoil and what it means for you and other retail investors out there. So stick around. Hey guys, welcome back. I'm Richard Allen with Tipranks TV. We're going to talk about the correction that is happening right now in the market. The Dow is now down 9% since hitting its peak on January 4th. The S&P officially entered correction territory, falling more than 10% since its peak on January 3rd. And the Nasdaq is now down almost 17% from its peak. So we are well within correction territory, really close on the Dow, and it seems that peak fear is starting to peak, if you know what I mean. So today we're going to talk about what's going on in the market and how this situation with Ukraine and Russia could affect the Fed and how they decide to hike rates or not for the rest of the year. We're going to talk about oil prices and how those continue to skyrocket, and how as a retail investor and just a normal consumer, how that's going to affect your pocketbook and your bottom line. And then I want you to stick around for the whole video because towards the end of this video, I want to talk about some tidbits that I've learned investing for a long time. I'm getting old. I may not look old, but I'm old. I'm getting a couple gray hairs. But I've learned a lot investing in the stock market, making some of the mistakes that you may be making right now. And right now, when peak fear hits, well, you're going to have to wait till the end of the video to find out my tidbits. But let's jump in. Let's go over the exact numbers of the S&P, the Dow, the Nasdaq today by jumping over to tipranks.com. The S&P down 0.6% right now as of recording this video. Dow Jones down 0.4%. And the Nasdaq falling another 0.89% on the day. Bitcoin up slightly today, about 1%. Ethereum up almost 2%. But BABA down 2%, Apple down almost 1%, Amazon down 1.5%, and Tesla under $800 for the first time in a while, down almost 3.5% on the day. So a lot of pain out there in the market. I understand how you're feeling right now. I promise you I've been through it as a normal retail investor just like you guys. But what's going on with Russia and Ukraine right now is absolutely going to affect your pocketbook. It's affecting the stock market here. Not as bad as a lot of people would have thought. It's kind of like more of a slow bleed, like one of you guys in the comments said, well, so this is kind of the same market we've been dealing with. And you're right. There's so much volatility out there, so much fear, so much uncertainty and doubt being spread by a lot of people that it's hard to keep up with exactly what's going on. The Russia and Ukraine situation continues to escalate. Russia, Vladimir Putin ordered troops into eastern Ukraine and recognized two regions in Ukraine as independent of Ukraine. And that spooked the governments around the world. They have initiated sanctions on Vladimir Putin. We talked a little bit yesterday in my video about how Russia, over the years, since they've been hit hard with sanctions since they annexed Crimea in 2014, they've really isolated themselves from the effect that these sanctions could have from them. And they've amassed a $600 billion fortune of foreign currencies. So they're pretty isolated from these sanctions right now. There's a bunch of sanctions that have gone in place from the US, from the UK, from Germany as well, stopping the Nord Stream pipeline. So there's a lot of stuff going on that is affecting you more than it may even be affecting Russia right now, because it's spooking the oil markets. And the statistics I've seen out there for what this could cause to your pocketbook when you're going to fill up your gas tank is 40 to 50 cents per gallon on regular unleaded. That's a lot. When you think about how much you spend on gas every year, it's around 3% of your total budget you spend on gas. So do the math. If you're driving a lot for work, things like that, it's maybe a little less now that the pandemic is going on and people working from home. But on average, Americans spend about 3% of their total income on fuel for your vehicle. Now, they spend almost 4.5% or more on energy costs, and energy costs are rising as well. So this will affect you. Energy costs, oil prices going up will absolutely affect you. It's affecting everybody around the world. So this absolutely will affect you. Even if you feel like it won't, well, it's in Russia, it's in Ukraine, who cares? This is going to affect you at the gas pump. It's going to affect your energy costs on your electricity bills. So just, it's something to pay attention to and know going forward. And with that, with oil prices rising as drastically as they are, it's going to affect the Fed's decision on whether or not to tighten faster or slower. There are about 70% of analysts and people on Wall Street that agree that we're going to get a 0.25% rate hike in March, not a 0.5%. In the past, when oil prices have skyrocketed, it has made the Fed more dovish, meaning that they are less likely to raise rates. The market is forecasting about 6 to 7 rate hikes throughout this year. Of 0.25% or more. There's a chance that that won't happen if gas prices go crazy. So something to keep in mind with the Fed, but more uncertainty in the market. Before we are finished and talk more about what's going on with your portfolio and what you can do right now, let's finish up talking about Ukraine and Russia. Ukraine has imposed a state of emergency. They've told their citizens to leave Russia immediately. And they've also initiated a draft to the Ukrainian reserves of people aged 18 to 60 with a maximum service period of 1 year. So that's another scary headline. Again, it isn't affecting the markets as much as I thought it might, but it's more of the slow bleed we've been noticing as of late. Now, again, the Dow Jones down 9% from all-time highs. S&P down over 10%, probably around 11% now from all-time highs. And the NASDAQ down 17% from all-time highs. So this market's crazy right now. So what can you do as a retail investor to potentially take advantage of this opportunity right now in the market? This may feel like the worst time to buy. But statistically, when we enter these corrections, it is usually one of the best times to buy out there in the market. So let me know how you feel. Do you have extra cash to invest in the stock market? Do you even want to look at investing in the stock market? Let me know how you feel. But statistically, it's a really good time to buy stocks that are good value stocks, cash flowing stocks that make good money. It's a good time to purchase those stocks when they're beat down because those are the stocks that tend to roar back the fastest. So you have opportunities out there with Amazon, Tesla, Meta or Facebook. You have opportunities out there like Palantir that has a ton of free cash flow, trading at $10 per share right now. It's absolutely crazy. Other stocks we've talked about in the market right now, like Open Door, trading around $10 per share. I bought a bunch of that the other day. But one thing I do want to say before we're done is if you do have extra cash to invest right now, don't take all your eggs and throw them into one basket all at the same time, okay? Because there's a chance that some cannibalistic hawk like Jerome Powell is going to come in and eat all your damn birds. There's a chance that stocks are going to fall much, much more than they are now. And I've talked about dollar cost averaging, and some people are scared to dollar cost average down into positions. But if it's a company that the fundamentals haven't changed, if you believe in Tesla long term and the fundamentals haven't changed, if you bought that stock at $1,200 per share, you better believe in it in $800 per share, because what's changed fundamentally in the business of Tesla, okay? But could it fall further? Yes, absolutely. So if you bought at $1,200 and now you're going to buy some at $800, maybe it falls to $700 and you might want to buy some more there. Again, not financial advice, but statistically, this can be a really good time to buy, but it may not feel that way in the markets right now. Thank you so much for joining me for another video. I hope this helped ease your mind a little bit with what's going on out there. If you found any value or learned something new in this video, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.